We are second in the industry. Sabic is number one, and Sabic has invested substantially in the industry. But to give you an idea on the history, this is actually, we are fortunately in the sweet spot of the chemical industry. And the reason for that is, for some reason, this molecule, I mean, ethylene glycol didn't have this aura about it that, it doesn't cure cancer, it's not, it's not what I would call, it's not in electronics, it doesn't go into televisions. So there is a certain, what I would call growth profile that these other industries have that polyester and PET bottles don't have, which is a very good thing because we like that others didn't invest in this. So, but the markets of these end users has been growing comfortably 5 to 8% year over year, and no new capacity came on. So with the tightness in the market and this incredible growth in the market, pricing power increased, which is why we have been an extremely profitable company. So yes, market share has slipped, but I'd rather have slightly slipping market share and be very profitable instead of having great market share and not make any money. But anytime customers are growing at 1x, 2x times what we are growing as a supplier, that's not a healthy trend. So we do need to catch up. Our market share has definitely slipped from the high teens to just around 10% now of the globe, which we believe is a little too risky. So we do need to build.
And your number one competitor has what percentage of the market share?
They would be around 25 to 30%. So they are, and they have grown substantially with huge investments, mainly in Saudi. But we have one big advantage over our competition. We are a global company. We have assets in Alberta, we have assets in Kuwait, and then we have a very powerful trading arm where we buy and sell from the merchant market almost as much as a world-scale glycol plant, as we call it, which is our biggest strength, because when customers expand globally, MEGlobal can pretty much take care of them wherever they are. Whether it's Brazil, we have one of our largest competitors, whether it's China, whether it's Europe, whether it's antifreeze in Canada, whether it's some guy in Long Beach, California, whether it's Oman, where one of the world's biggest PET plants is coming up, whether it's Pakistan, where we have some of our largest customers. We are able to do this that nobody else can because of the location of our assets and because of the fact that we almost buy and sell a world-scale glycol plant. So our flexibility to move cargo around based on what customers need is what has kept our customers so loyal to us. But strategically, we need to decide, what do we want to be? Do we want to be the big kahuna, as they say in the US? Do you want to be the largest player, or do you want to be, a low-cost producer that is still very profitable? And that is something that we need to wrestle with to figure out what it is that we want to do.